Hey everyone, thanks for tuning in. This is our weekly Precision Markets office hours with Precision Markets Coach Brian. We're host these office hours every Tuesday at 12 o'clock p.m. Pacific Standard Time. That's GMT -7 for different parts of the world. We host this to be able to have a visual way of being able to kind of share charts, answer questions, and to be able to kind of have an interactive section to our question and answers that we have through our Discord. So the format is, for those who haven't done this before, we usually have this where you can ask questions inside the chat. Once you ask a question, I'll answer them in the order that we receive. If you want to share charts, you want to chime in when it's your time for your question, don't hesitate to do that. Just go ahead and just share. I've enabled screen sharing. So with that, I will let people ask questions and then we will answer them in the order that they receive. You know, the thing I like about UJ right now, guys, is that UJ's economy is usually a safe haven, and they're going into a recession and they're not going to raise interest rates and stuff like that. So that means we're going to end up getting a Japanese yens being attacked on all fronts. So it's like literally all you have to do is buy. Right.
Oh yeah, that's nice.
You
And
can't
today
really
it
beat
was
that.
pretty clean upward price action. So yeah.
It's always been one of my favorite pairs because, like you said, the price action is clean. It moves very impulsively too. So that's a plus as well too. UJ shoot up, Cat JPY shot up. Had I done, like I mentioned, if I had taken into account M10 zones, because I've only been taking into account 15 minutes, 30 minutes, and an hour, but preferably either 15 or an hour, really. If I had counted in some M10 zones today, I could have cleaned up with, I think I saw 20R on UJ. I could have done 34R on US 30, and I could have done another 30 something R on two different setups on EU. Also, I would have taken 2 hits on US 30, and I would have had 2 break evens on US 30 on top of that trade. So every good thing comes with some bad. So you just have to balance them out.
Yeah, that sounds nice. See, the autumn itself is always a good time to trade, to make some
Yeah.
money, because market respects price action more, I guess.
Yeah, it was just, especially yesterday was a holiday. You can just tell the difference from the way the market moved today compared to yesterday. Either they were catching up for lost times or the market really just moves that much better when you have both sessions. Like, I mean, the thing that I always try to keep in mind in the market is that it's not our market. None of this market is ours. None of this is for us, right? It's the bank's market. We just take the signs of when the algo or the bank's manual execution is moving. So if they're not in the market, guys, I don't really see the point of us being in the market because we don't have enough money collectively as even retail traders trading less than millions of dollars to move the market. There's nothing to fear about the market. There's nothing about the market that's mysterious. It's very simple. When there's a high volume of orders, the market moves in that direction. When there's equal balance in orders, the market doesn't move. So we have to find the place where they're either going to put more orders or the place where they're putting orders. And once we figure out those things and we ride those waves, that's how we make money at a very, very like fundamental perspective. So like, don't try to get caught up in the mystique of the market and all that. There's nothing truly mystique about the market.
So which pairs do you trade right now? And can you tell why?
Yeah, so I'll show y'all what I do. Give me 1 second. Let me find my screen. Let me know when y'all can see my screen. Things pulling up now. Oh, there it goes. Okay, can y'all see it now?
Yeah.
All right, cool. So basically, I have only trade 3 pairs. Because I deal with correlations, right? So what you'll see here is I have blue flags and orange flags. Orange flags are my alternates, meaning I don't trade those on an active basis. But if, say, for instance, that day the price action on one of the blue pairs makes no sense to me, then I will trade the blue pair. I'll trade maybe the orange pair instead of the blue pair. So that's why I call this pair 1, pair 2, pair 3. And the reason why is because they correlate. So I try not to trade no more than 2 correlations, because when you look at the chart, it's going to look pretty much the same. So in bucket 1, I have EU, AU, and GU. The reason why they're all correlated and highly correlated is because you have USD at the end, right? And so then I have pair 2. Pair 2 is JPY. So I have USD JPY, CAD JPY, Euro JPY, and GBP JPY. I'm not trading GBP JPY because I'm going to show you on a second why, but anything GBP, I'm being very cautious of because of the way that the market is. And now Euro USD is still a little bit confusing to me. I'm going to be very honest, but I'm still like, I still have a kind of general sense of it, but Euro JPY, as of late, I really wasn't finding any entries. So I switched to CAD JPY, and CAD's a little bit more stable than the European economy right now. So, and then the last thing I have is my indice. My indice would be NASDAQ US 30 and the SPX 500. And really I could add the DAX, the German 30, German 40, some brokers are DAX 30, but I don't really care to do that because I hate their hours and their margin is a little bit bad as well too. So the reason why I trade that is because let me put 2 of these bad boys side by side and it'll start to make sense to you. I'll put 3 actually. All right, so not the same pair interval. Okay, cool. So we got NASDAQ here, US 30, and then SPX 500. If I go to the same point on each, what you're going to start to notice is that the charts look almost the exact same, especially SPX 500, US 30. They definitely look like identical twins, right? But even if they're not exactly identical, the movements as far as where price is going, it's pretty much about the same. When one's going up, the others are going up. When one's going down, the others are generally going down. Market structure is a little bit different. These are more Siamese twins more than anything. But it just helps me to be able to, like I said, if I see, for instance, like a setup like today, if I don't see it on NASDAQ, I may see it on US 30 because generally I have the same bias on a daily basis of which direction I'm going. Does that make sense?
Yeah.
So then we got pair 2, which I'll do US, Euro, GBP. Let me add a 4th one in here. Change the view. So we got US, CAD, Euro. Okay, cool. Yeah. So pretty much Euro JPY went from between this low and this high. I don't know what that drawing is. Low and the high, and then here it did the same thing. So we're basically stuck in a range between that high point. This would be resistance, and then this is generally support. Oh, wrong thing. And then this is pretty much support right here. But really, both of them have kind of gotten even worse than that. They kind of pull into here. So this is more like resistance now and support. So it's not really, it's been like this for pretty much since April of this year. And it's, the bank's trying to figure out what's going to happen with the economy and stuff like that, because Euro's got the energy crisis and other things. This is pretty much resistance. This right now is acting as some type of general support in this area. So for this reason, I didn't really know where price was going. I figured it was going to go up, but when it was here, it really wasn't going anywhere. It really kind of moved sideways. There was more consolidation. So I stepped away from that. CAD JP. Oh, where's CAD? There we go. CAD JPY was a little bit more clear to me. Because when I saw this coming from this area, I pretty much had an idea that it was going up, especially because it made a more recent high. The other ones, you go all the way back to June. That was the last high for Euro. I expected maybe for it to take out this low. I was thinking maybe this low would be weak, definitely wasn't. But also, we don't know that the high is strong either. I could be weak too. So this one made the last high it made was back in April. So that's why I have both of these as my orange or my alternates, because right now I don't see a clear picture with this. Whereas this one, I'm pretty much clear that this was going to go up. It's taking this high now. And UJ, well, these are old drawings, but once it had broken this daily, I pretty much expected it to continue going up. And especially with what's going on with UJ, I don't expect for price to pull back anytime too soon. It's been pretty much in this bigger uptrend. So now I would expect for whenever it decides to come back down, which is when the dollar gets weaker, which is hardly going to happen, it would come in somewhere in this range, find a demand zone, and eventually go back up. Now, it may not take out the new high that it's created, but it's definitely going to go somewhere up to it because the dollar is just strong right now. And it would take for Japan to raise their interest rates, which I doubt they're going to do because they're trying to be a safe haven. And they're also going through a recession right now. So for both reasons, that's why UJ is going up. And then, like I said, they're going through a recession. So every other more stable economy, Canadian is a little bit more stable. It's more stable than Japan right now. So of course, I expect for it to go up. So that made it also easy for me to take my buy for today. And then last but not least, these are my least favorites. EU, AU, and then GBP USD. So I've been staying away from anything GU related, but they're pretty much all moving in the same manner. EU, I hate this little range that is built up. You see wicks everywhere in every which direction. I really want that to go. I really wanted it to close with a body close below this low, and we see that it hasn't. So that's another day of anticipation, but I expect for it to continue going downward. AU was clear. It made a lower low here. It didn't really make a strong move up. And once it broke this low today, I knew it was going down. So it was going down. I expect for it to continue going down, even though the RBA last night announced, Royal Bank of Australia announced that they raised their interest rates. So I thought that would give it a bullish bias. So the beginning part of this morning, I had a bullish bias. And I said, if it clears the spot, then I'm going to sell. It cleared the spot, so I sold. And then you have GU, which actually GU has actually been pretty much clear because it's going to drop. GU just changed their prime minister today. Probably had more of a clear setup, but I like GU and AU over EU, but I've been trading more EU recently. And I may swap out EU for GU just because it's a little bit more clear with as I'm waiting for this energy stuff that's going on for it to really, figure out exactly what's going on with EU. So we'll see what happens. But for the most part, let's see if it was even clear today. Probably wouldn't have been a setup here. I'd have been looking for sales for the day. But here would have been a demand zone broken. Here would have been a supply that I may have considered. And then, no, not that one. No, maybe not. Maybe not. I don't really see a setup that I would have taken maybe off of GU today. But definitely probably was more clear of the two from a directional standpoint. So, and after this is after trading hours. So AU for me had the best setup of the three today. I looked at it from an hourly basis and said, if it broke this right here from an hour standpoint, I would sell. It broke it. So my directional bias, this was the last kind of significant low. And I said, if it broke it with a candle body, I would switch my bias to sales. So that's exactly what I did. And it tapped into this 15-minute zone right here. And it made for a great sale. And then we got a spike because of the news. US dollar came in strong, but ultimately Australian dollar is still hurting. So, but that's how I look at the market. So when I start my mornings, I go on a daily, I try to figure out what direction do I think my bias is going. I'll say something like this. market's going to go downward. So that's the direction that I'm taking in all of my trades for the day. And I don't, unless I have a reason to change it, I don't change it for any arbitrary just reason. It has to be something solidified from a structure standpoint, or supply overtaking demand, demand overtaking supply. And then after that, I just identify my zones. These little orange lines are my alerts. I set my alerts on my zones, and then I just wait. So that's how I'm able to look at multiple pairs at one time. Ignacio, you mentioned London session. Do you mind rephrasing your question? Go ahead and type it out. You can type out the question. No, this trade was in between New York and London for AUD USD. So it wasn't a London session trade. We have a question on crude oil. Pretty much, I don't trade oil, but what's it, WTI? Yeah. But from a technical perspective on oil, I know they're cutting supply. I mean, they're going to be cutting production, which is going to hurt supply. I would expect that we find some sort of demand that goes up here from a fundamentals perspective, because we just now had a market structure break for a change of character, which broke the structure of the lower lows and lower highs. So possibly we could be finding something. If this low goes and we end up taking out this low, then I would expect price to do maybe a drop down, and then they'll do something with production. Hold on a second. They'll do a drop down and they'll do something with production that'll make it come back up, and then all of a sudden there might be another spike for it to continue going down, because right now price has been making high points. And possibly this could be where oil prices begin to drop because there's a lack of demand. So we'll see. But they're going to try to do things to help regulate price. But I don't really trade oil, so that's just the best I can see from eyeballing it from a 50,000 foot view. No, not a problem at all. Not a problem at all, guys. What other questions do y'all have? Any charts y'all want to share? Anything y'all want to review that I haven't got a chance to talk about or ramble about? Nah, I don't ever check the futures market. I never do. I always thought that was interesting. I don't really know enough about futures as well. That's something that maybe a couple years from now we'll learn. Next year, I know I'm going to focus on the stock market, because I think the stock market, at least for the U.S. stock market, it's a little bit easier to trade than Forex. The only thing that sucks about the stock market is that it doesn't have as much volatility. So like when even looking at the daily candles, look at how many gaps there are. There are like lots and lots of gaps. So for instance, here price made a lower high, right? So this was the last lower high was in May. And then here it came up to here on the beginning of August, right? So if I come here, I think it's a little bit different too. I'll really use my time frames just a little bit differently. Hold on 1 second. Where is my, I got rid of my template for stocks. Hold on 1 second. Where is, oh, layout. That's why. Don't need that one. Don't need that one. Don't need that one. Where is my, I think this is the one I needed. No, it's not that one. This and yeah, and then see. I would use the hourly. So once the hourly breaks through here, I would have been looking for the sell setup right here, when price would have gone into this, would have been 9:30 in the morning for me, which is pretty early. I would go down to the 5-minute. And at the 5-minute time frame, I would have been looking for market structure breaks, in which we had one come right here. Then I would have looked for my entry. I would have pulled this wide zone right here. I would have looked for my entry right there. As soon as I would have seen this candle get broken, that wouldn't be it. This one, I would have bought. I would have sold right here. This is Coinbase's stock. I would do options, and essentially, the thing about options is you make a price target. So my price target probably would have been, I would have tried to buy my price target somewhere right in this area. And if it would have gone from like here to here, that might have probably done whatever money I would have risked. I know it shows it within like 5R, but essentially, pretty much with stocks, as soon as you get to your price target, anything above it is your stop loss. So like your stop loss really is non-existent, because it means pretty much if stock doesn't end at this level right here, which was, what's this, $70.63, you would lose money as long as price is above it, right? So probably my target would have been like something like this. I probably would have made like 770. And so then what would happen is, as long as price was underneath this, I would have made money, and I could have held this stock intraday, or a couple of days really. So I would have bought in here on like 25th of August, probably would have closed the next day, the next morning. And so like the stock options, I think with what we know between like market structure and supply and demand and liquidity concepts and inducement, I really think you can clean up on the stock market a lot easier than you can on Forex, just from what I've seen. Especially I've seen like I've been part of a couple communities too, where I've been learning, seeing how they approach the market. It's just knowing how to buy like options contracts. So after the end of this year, probably I might even do it during the holidays, but I might especially focus in on February. Once I finish my trading day with Forex, I'll take a look at what I get from the stock market, because my stock market doesn't really open. The stock market doesn't open until like 7:30, 8 o'clock my time anyways. And around that time, that's like in the middle of that's in the middle of like the London New York kill zone. So I probably would basically finish trading Forex. My kill zone hours for London, it ends at 11 a.m. my time. But by then, I've already finished probably my trading for the day. So I can go look at stocks, plan some stock trades, and just set alerts on TradingView, and that's a wrap.
But this looks very clean on lit also, I think. I can
Yeah,
see
and you could
see me getting in here actually in this place.
Oh yeah. Mm-hmm. Like the stock market doesn't move a lot, but then when it does, like it makes jumps. And you don't have to go to really small time frames. Like we don't have to do like 1 minute and stuff like that. I'm using 5. You could have used 15, I think, with this too. So it's like higher time frame use cases. But once you know price action, you can really make this work with, if you understand fundamentals of what the company's doing. Like you could make a lot of money. Like just this move between here and here alone, you could 10x your entire, you could 10x whatever you risk. Or even, depending on how much you risk. Like some people risk up to 20% of their account per stock trade, because they can wait for a long period of time. But it's just understanding to know about like how to buy options contracts and such, or basically stocks or buy and holds. Thing I hate about stock trading in the United States, you have to have $25,000 to be a day trader. But for me to do options, I could do options with $100. So it's like very liquid, like Forex is kind of. So yeah, so that's the next thing I'm definitely going to get into.
So can I ask one thing?
Sure.
With stocks and options, I know options, you just buy something like a stock certificate, if I understand correctly, or am I wrong on that?
With stock options, you're buying the option to purchase, or the option to purchase 100 stocks, right? So it's like think of like a 1 to 100 leverage. So let me do a board. Let's say, for instance, a second.
Okay, I kind of understand what you're saying by that. Yeah.
Okay. So let's say, for instance, we're going to say coin is the stock. Please bear with my horrible handwriting. Let's say, for instance, right now it's at $76, right? And let's say, for instance, you can get it for, you're going to buy 100 shares, but you're going to get it at $4 per share. And you have the option to buy 100 shares, right? So your total cost to buy the option contract would be $400, right? So
Right.
you would only have to risk $400 to be able to buy it at 76. So say, for instance, the price goes to 80, right? Well, that $400 would be worth $1,600 or something like that. That's how basically options contract works. So let's say, for instance, that's the strike price. But let's say currently the price was $74 when you bought it, $74.88, right? So you need the price to go to 76 to break even. Then you need the price to go to 80, and your $400 might be worth somewhere like 1,600 to, we'll say somewhere like 3,200. That's just how the options contracts, that's how options contracts pretty much works. So like you can multiply it very quickly. You can multiply your money. And you could say, for instance, if you had $1,200, you would buy 4 contracts and 3 contracts at, so that $1,200 total all in will grow to like 3,600 or 6,400. And it's just really knowing which direction the market's going, because it just needs to go, it needs to go somewhere below this or above this, depending on how you do it. So that's what I call it options, because it's buying the option to buy the contract. And it's very liquid. So like at any time, say for instance, price hovers around 81, you can press a button to instantly close the contract and lock in your profits. Or you have an expiration date, and at the expiration date, you have to actually take the money and buy the stock. So you would actually own the stock, and you would be paying $76 per share. But if it was worth $80, you'd still be in profit, but you would just actually own stock. With option contracts, you can sell the contract off in a profit to make your money back, so that you don't have to actually buy the stock. Because then if you had to actually buy the stock, you would multiply 76 times 100, and you would be paying $7,600 for all of the stocks. Does that make sense?
Yes, so basically you borrow the stock, and when it rises, let's say, you give it back and get your profits from it, something like that.
Yep.
Okay, and the short selling is pretty much the same as we do now. We basically, I guess, borrow and give back cheaper. They give you money back or something like that, I guess.
Yep. So let's say same example, it's 74.88 again. And let's say you buy sell an option, you buy an option to purchase the stock at $74, right? So essentially, we'll say, for instance, the premium is only $4 again. So that's 100 times 100. You would have to pay $400 per contract. Now, let's say price drops to $70, then if price drops to $70, then they would you would basically turn that $400 into like $1,600 or something like that. And then you could just sell off the contract to close off that $1,600 in profit. Or I forget, this is the part that is always fuzzy to me, but basically what happens is the person, say for instance, the person has to buy this. Say for instance, you let the contract date expire. What happens is the person who is selling you the contract, they have to buy the stock at $74, but they give it to you at the current price. which is $70. So that means they're losing $4 per share, which means they're losing that much amount of money. But you have the stock at the current price, and then you could turn around and sell it, whatever. Or let's say, for instance, the stock rose up to 78, then you could turn around and sell out all those pieces. So basically, that's how it works on the sell side. Then there's also a whole nother portion where you can sell buy contracts and you can sell contracts, but that's something I would never get into because it gets real tricky. And if you don't have the stock, that's why some kid ended up killing himself when he looked at his account one day on Robinhood and it showed like a negative 7 million because it was all some weird math that had to be done. So
What the hell?
yeah, crazy stuff.
By the way, so this number here, basically one minus $1 from here means we are going plus 400. Am I correct?
It's something like that. I kind of forget it. I kind of forget the way that it works, but it's something like that. So when you see people talking about 1,000% gains, it's imagining like a 1 to 10x, but the movements, like the movements on a stock market chart are so different than like movements on a forex chart, right? So like for instance, this could be somewhere like 500% and 5x, and that was only $1 drop. But it depends on how you buy the contract. The contract determines like how much percentage gains for every $1 drop or every 50 cents or every 75 cents. And that's the key that you have to really understand about options is how to buy the contract so that every movement is more incremental for you than the rest. Because instead of that $4 like I was sharing, it might be $3 or it might be $2 depending on how you buy your contract. But then you also might have a lower or higher target as well too.
Let's see.
So, but yeah, that's the next thing I'm definitely getting into because I see so much opportunity in it. But yeah, guys, that's Ignacio. So there are a couple of different financial markets that exist. There's a market called futures where they're bidding on the future price for like a certain asset. Hold on 1 second. I'm trying to find something real quick. So that's not the thing I wanted. Okay. Yeah, this is what I was looking for. Okay. Let's share something new with y'all. All right, cool. So pretty much like there are multiple financial markets, right? There's the stock market, which is what I'm talking about now. You can buy bonds. We have the foreign exchange. We have cryptocurrency, which is new. We have commodities like oil, gold, silver. Those are all commodities. And then we have derivatives. I don't know the best way to explain derivatives, but derivatives derive their value from a certain asset. I don't know the best way to explain it, but it's just the derivatives market. So what we trade is the foreign exchange market because that's the largest market in the world, foreign exchanges. But when you trade crypto on your Forex broker, you're trading the cryptocurrency market, but you're trading what's called a contract for difference, meaning you're borrowing the asset. You're not actually owning the asset. It's like when you buy BTC USD on your Forex broker, you don't own it. You can't transfer it to your account, etc. When you buy, damn, Bitcoin just dropped. Sheesh. When you buy a stock through your Forex broker, you don't own the stock. You're borrowing it and you get money paid for the difference. That's why it's called contract for difference. So this trying to find, wish I could get a better example of the derivatives market, but yeah. So the stock market in the United States exchanges $69 billion a day on its heyday. The foreign exchange market exchanges 7.7 trillion. Like you just can't outbeat it. The Forex market, the cryptocurrency market is somewhere in the billions. The commodities market, can't remember how much. I don't even know how much they do. So, amount of exchange on a given day. Financial markets. See if they get it. I'll see if I can find something. Volume. Yeah, but that's not what I want. Yeah, but pretty much that's why we trade Forex, and that's why it moves so much. You just have to know. Here we go. Let me read this real quick, guys. U.S. equities exchanges like $580 billion a day, or basically the bond market. Foreign exchange dwarfs all of that by doing like trillions of dollars. That's why it makes sense to do the Forex market. But what is it showing what I'm looking for? Here we go. Bonds do 635 a day. Fixed income trade markets trillion. Foreign exchange does over 6 trillion. So it's like a complete difference is basically what I'm getting at. But that's the reason why we trade the Forex market. It's really liquid, meaning there's lots of movement. That's why you can exchange orders so quickly. So, but yeah. And the foreign exchange keeps going up as well too. So like this number was in 2016, it was only at 5 trillion. 2018 was like at 6. Now it's at like 7.8. Soon it'll be like 9, or basically 8, and then within a couple of years it will be over 9 trillion a day. So that's why you should never really fear about Forex going away, because there's no way for it to go away with the amount of money they're exchanging. I don't care if we exchange crypto, like let's say for instance we get to one world order where there's one currency exchange. Well, there's still going to be derivatives anyways, because Russia is not going to play ball. Russia and China ain't going to play ball with the rest of the world anyways. So like there's always going to be some exchange factor. Like there never can be no like one world order, because there's always got to be comparative advantage. And if not, we'll instead of changing currencies, we might exchange goods like gold and silver and get back to actually having the United States dollar being based on an actual tangible asset rather than being based on inflation and just money printing. And basically every United States dollar is worthless because it's not based on any kind of what's it called? It's not based on any kind of like gold, silver, or any asset that backs it. It's based upon a promise to pay from the United States government, which with the economy of the United States being so good, that's why everybody in the world had reserves on it. So it used to be based upon an actual tangible asset. It is no more. And so if the United States ever started defaulting, the world would be in trouble. Let's put it like that. So yeah, guys, but sorry for talking a lot of economic theory. I graduated with an economics major. So part of this interests me. Part of it, me not realizing that I actually went to college or uni for something that was actually useful. And so this is more like the fundamental side of just understanding the markets that I kind of dive into, because it's a little bit intriguing to me once you understand it. It gives you kind of context to know what you're looking at on like Forex and stuff like that.
Didn't you learn this in uni?
Not everything. A lot of things I learned after, but I learned generally how the market works, like general market mechanics. Why, for instance, when China sneezes, the United States has a flu, et cetera, because it's just all about really comparative advantage. That's the thing that makes these markets exist. Like whether you trade liquidity, whether you trade supply and demand, whether you look at market structure, it's all based on the fact that there's a point where buyers are more than sellers, sellers are more than buyers. There has to be a supply. If there's an imbalance of too much supply, demand goes down. If there's too much demand, prices go up, et cetera. Like that's all the basics of economics. But there really can't be no one world order, because there has to be something to balance the equation, right? So like America is going to try to take, for instance, the jobs that these companies have in building, manufacturing chips. Like they had the whole CHIPS Act that they were passing. That's going to hurt China's economy. that's supposed to create new jobs in the United States that'll also hurt consumers in China and other countries. And it's not going to lead to more, it should lead to more exports in the United States, which should help strengthen the dollar, but it's going to be a direct hit to Chinese economy. But then there's going to be something that China buys from the United States that's going to take a hit. So it's all going to be relative to see if the hit going to be as bad as the gain, if that makes sense.
Yeah, interesting. See, I also graduated uni, but in economics, but I didn't learn stuff like this, I guess.
Like I took like when my senior year, I took a lot of like economic theory classes, trying to really understand. I took a lot of macroeconomic classes, understand like country versus country. I don't know why, but now it's beginning to come in hand because some of these things I learned, some of these things I just kind of read along the way. And so like it added to more context to a lot of things I had in my books that I put past tests on, but couldn't honestly tell you what that really meant. So
Yeah, same here.
so guys, thank y'all so much for tuning in. Thank y'all for allowing me to ramble. But I appreciate y'all with the questions. If you didn't get a question that you have answered or you think of one later, don't hesitate to ask with inside Discord. Don't forget that we also have on Thursdays another Q&A Power Hour call with Rob. So it'll be more times to ask any of your questions that you come up with. And then on, I think this Sunday we'll have back testing. If not, we'll have it the next Sunday afterwards. So highly recommend you sign up for it if you haven't. And don't forget, guys, you can always sign up for one-on-one coaching from us. So if you have something you want to work on, we can go in depth. As Luca would tell you, it helps even after one session. You went one session with me, and I'm seeing all kinds of crazy results and progress from him. And literally, it's just small things sometimes we need to tweak or give you additional homework to focus on that one area that's going to help you become successful. So, hey, we're here to help you, man. We just wanted to see everybody succeed. So just let us know how we can help, guys. But outside of that, I will catch you on Discord, and I wish y'all a great week of lots of pips and no losses.